Hello to all the debt warriors listening, and welcome back to another episode of Millennial Debt Domination. I'm your host, Katie Fada. Today's episode is about debt settlement. I'll be joined by two guests on this episode who have a wealth of knowledge about debt settlement. My guests are Phil Getz, who is the Director of Industry Relations at Navicore Solutions, and George Veitengruber, who is a bankruptcy lawyer here in New Jersey with a deep knowledge of debt settlement options. Some of the debt settlement related topics we discuss in this episode are types of organizations that provide debt settlement, when to turn to debt settlement, and what tax implications come with debt settlement, and also much more. Now let's get to my interview with George and Phil. Hi, Phil. Hi, George. Thanks for being on the podcast today.
Well, thanks, Katie. It's great to be invited, and I'm excited to take part in this.
Thanks, Katie. I really appreciate the opportunity.
I'm glad to have both of you experts on to talk about debt settlement today. I'm kind of going to take a back seat during this interview and let you guys inform our listeners about this topic. So I guess to start, we'll just start by asking, what is debt settlement? If you guys want to take it away.
Go ahead, Phil.
Sure. Yeah, so simply stated, settling a debt is really just an agreement with a creditor to pay back something less than what you owe. Typically, the trade-off is that you'll have to pay a reduced balance, but you'll have to come up with a lump sum over a pretty short period of time. So might work fine if you have one or two accounts that you're trying to pay off, but can be more complicated if you have many accounts. So just simply stated, really, it's just an agreement to pay back less than what you owe for an account.
Okay.
The big problem, of course, is that in order to get into the opportunity of having a debt settlement, it also makes an assumption that you've probably defaulted along the way. You're dealing with a credit card that is 4 to 6 months past due, or you're dealing with a matter that's gone to collection, and both of those are creating derogatories on your account. So the entire matter related around debt settlement is that you've already put yourself in a hole, and the settlement is an opportunity at a discount to potentially get out of that hole. But if you don't have a plan in place, you could be stuck in a position where you're degrading your credit for a significant period of time.
Mm-hmm. Yeah. So you kind of mentioned that you would need this if you're in a hole and you're trying to get out of the hole of debt. So what types of organizations would provide this debt settlement, and what should a consumer look for when they're selecting an agency to go with?
Yeah, well, so George brought up some excellent points there, and I think this kind of does lead into what type of organizations you want to be working with. As George stated, typically when you're going to start to talk about debt settlement, you've already gone through a point where you haven't been able to make your payments. So you're at a point, you've missed 4 or 5 payments, and your accounts may have entered what's called a charged off status, where the creditor has kind of written it off that they don't expect to collect from you. So that damage has been done to your credit. Where I think you want to be careful is when you're reaching out to debt settlement organizations who you'll see doing a lot of advertising on the internet, and they make things sound very exciting, but they'll take you with accounts that are current, right? Which is which is really what you want to try and avoid. This is for accounts that have already been damaged or already missed payments. So you want to be careful. A debt settlement organization that says that makes a recommendation to go through a debt settlement program, and you're only maybe a month behind on your payments, or you may even have accounts that are current, that'll start the process of really, they'll have you miss payments to your creditors, and that's what really starts to damage your credit report. So I think when you're going to consider debt settlement, you want to reach out to someone reputable, like an attorney like George, or even reach out to a nonprofit credit counseling agency to kind of look at what options are available to you.
And Phil brings up a really good point, and we're looking at, in theory, at least 3 or 4 different places you can turn to.
Mhm.
And the idea that you're current or only a month behind means that you should really be careful and read the fine print of these contracts that come over, because unfortunately my relationship with most of the for-profit debt settlement groups is they promise you things. The quick 30-second commercial says we'll save you 60% off of the amount due, and they don't explain what that is. Like, is it the amount due now, or is it the amount after they default you for 6 months and the interest and late fees continue to accumulate? And I've had many clients walk into this office that had previously gone to debt counseling first. And in that, they made payments to a for-profit agency for 12 months. And they found out that they had been funding that agency's bill up front rather than funding their settlement programs. And they wind up in a worse position than when they started. Whereas pivoting to the nonprofit sector, such as Navicore, they're dealing with a budget in front of you, your realistic budget, and how to help you figure out how to get out of that hole. And obviously, if that doesn't work, then you find yourself in a position with somebody like me, where I'm going to give you the option of, this is what it costs to settle these out versus this is what it costs to bankrupt them out. It's most important to understand all of your options before committing to your path.
Yeah. So yeah, definitely.
Oh, you mind if
go
I
ahead.
piggyback on that, Katie?
Go ahead.
So George described excellent example of what does happen with consumers. So they do reach out to these debt settlement companies, and they maybe have 5 or 6 accounts, and so they start to make payments to a debt settlement company. They actually, if they're not very careful or they're not savvy and they haven't really read the fine print, they in many cases think that they're already addressing their debt with the creditors just by making payments to these debt settlement companies. But what's typically happening is that the debt settlement company is just accumulating funds until they have enough to make an offer to a creditor. So they may not be even in contact with a creditor yet. So it could be 4, 5, 6 months before they go and approach to settle one debt. All that time, a client is missing payments with their creditors, or they're not speaking to their creditors about their situation. So the situation can really escalate and get out of hand. In addition to the fees that George mentioned and penalties that might be accumulating, the creditors who are not getting contacted could be initiating lawsuits during that time. So a lot of times it comes as a surprise to the consumer, because they're thinking, hey, I've been making payments to this organization. Aren't I taking care of my situation?
I really worry about that too, because when you look at a lot of these organizations, the for-profits, you're talking about agencies in California, Chicago, Florida, where if you're a New Jersey consumer and all of a sudden you made the mistake that you thought they were resolving this, so you stopped opening your mail, and now you got a letter from an attorney suing you, they say, hey, look, I just got served with a lawsuit. And the company either comes back and says, okay, well, I need you to pay $800 a month more than your original budget to resolve this. Or now a company has a judgment against you. They start garnishing, they levy on your bank accounts, all of these things because you were under the assumption that once you started with these guys, they were taking care of your problems. And sometimes you find out they're not, and they can't provide representation in your state.
Yeah. There's definitely a lot to look out for when you're looking for a debt settlement company. So, if you're looking for a debt settlement company, I think you might think you're at the point that you need to consider it. But at what point should a person be considering debt settlement?
Yeah, I would say you want to, you certainly want to keep in mind that you've borrowed money, right? Ideal situation is that at some point you pay back the loan or the credit card debt as it was agreed upon when you first started. So if you're just a couple of months behind, a lot of people run into difficult situations and they can't make their payments. Creditors do have things set up where you can get on a repayment program, get yourself back on track. Bring your accounts back into good standing, right? So just because you've missed a few payments doesn't mean you want to go and resort to this. When you're going to consider something more like debt settlement, it's when you realize, you know what, even I don't anticipate I'm going to be able to get back to a point where I can afford regular payments again. Then you have to start looking at some other options like this. But then you want to be careful and you want to reach out to either a nonprofit credit counseling agency or somebody like George, a reputable bankruptcy attorney, to consider your options.
My mindset on this always is that we all, no matter how you feel, how secure you are with your budget, we all need to take an opportunity to look at our budget and see exactly what we're spending and understand exactly what's coming in order to see if we can figure out another way around a debt crisis. If somebody loses a job or somebody gets sick or there's, the stove goes in the house, or the car dies and now you have to put down a down payment. So many times now, the average American is living paycheck to paycheck, that they can't plan for a catastrophe. And part of that problem becomes we use credit cards as our Band-Aid to get by. But the typical person doesn't appreciate that Band-Aid comes with a 19 to a 29% interest rate, that if you're only making the minimum payments, you're probably not gaining much ground on paying it off on a month-to-month basis. So financial literacy is really where all of this starts. And that's understanding your budget before you find yourself in a crisis.
No,
yeah. And then also, great point too. And this can, people do run into difficult situations, right? And this is also an opportunity, if your situation has gotten out of hand, to reflect back and look at your budget and think about, all right, well, so what things did happen to lead me to this point? And I can come up with a solution now to handle this, whatever it is, but what am I going to do going forward? Are there things that were preventable leading up to it that maybe I make some changes and I can ensure that I'm not in this position again 4 or 5 years down the road after I handle this one. So it's certainly a stressful time, but it can also be an event or just a time to just readdress your situation and get yourself set up for the future.
That's a good point. There is there's debt management plans. There's going on filing bankruptcy. There's different options to do when you are, you're so far in the hole. So how is debt settlement different from something like a debt management plan and from bankruptcy?
So the difference between debt management and bankruptcy almost comes down to how big is the hole you're stuck in. And then the follow-up question is this as bad as it's going to get? So if there has been that change of circumstances, somebody lost a job or you lost a spouse, you got divorced, the kid got sick. If something has gotten bad enough that you find out that your paychecks are not taking care of your budget, and no matter how much you scrimp and save, something is not going to get paid. Now you're looking at the bankruptcy analysis. And bankruptcy is a pretty simple way to look at it. When somebody asks me how much debt you need to file bankruptcy, the answer is always it depends. Because somebody that makes $20,000 a year, if they're $10,000 in a hole, it's too much for them. If somebody makes $200,000 a year and they've got $50,000 of debt, it might be manageable. It seems unwieldy, but it's manageable. So the way we do it is we offer a free consultation to all of those people in order to review their budget, review their current finances, review their debt. And we're very, very mindful of what the monthly carry cost is on your debt. When we add up your mortgage, your car payments, your car insurance, your utilities, your student loan debt, and then we factor in your credit cards, we want to see, do you have a surplus or do you have a deficit? And if you have a surplus, how much towards principal can we kick on every single card to show you exactly how many months it's going to take to get out of the hole. And then you compare the months it'll take you to get out versus the time it'll take you to recover from a bankruptcy, and then you choose.
Yeah. And I would say with debt management, so we're kind of the, not yet for debt management programs, we're at the point where we do the same analysis, trying to figure out what your income and expenses are and what potential changes you can make. And now you're at a position where you feel like, okay, you know what, I can manage to get myself back on track. You'd have a monthly payment in front of you that would help you, that would have your debt paid off within 5 years, and that's factored into your budget. And if it's something that is affordable, then that would be where a debt management program would be appropriate. And in that case, you're just making one payment to the credit counseling agency, and they're paying all of your creditors for you. So they're all handled at the same time. And I think the structure of debt management versus a debt settlement program and what those agencies offer is where the big difference comes in as well. So we're handling all the accounts at one time, whereas a debt settlement agency, in many cases, they're only dealing with one or two creditors at a time, because a debt settlement program, when you're settling the debt, a lot of creditors want their money quickly, right? So a consumer, even if you were able to make a debt settlement arrangement with 6 creditors, you might not have the funds that they're requiring to get that debt paid off in under a year, say. So what the debt settlement structure would be is, okay, we're going to deal with 1 or 2 accounts. When you save up enough money, we'll make an offer, get those accounts paid off. Then we'll go address the other creditors along the way. That process can also take 3 to 5 years. The only issue is some of those creditors are not being contacted for several years, and that's where the trouble in many cases comes in, because they're not going to be patient. They will start lawsuits in many cases.
The squeaky wheel always gets the grease, and
you're right.
And that's it. Is that these guys, these collection agencies don't have to be patient with you, and you're running the risk by not resolving things with them sooner rather than later of them hitting your bank account without your knowledge. Once they have a judgment, they can do that, or they reach out to your boss, and now your company's involved, and they're hitting your paycheck for 10 to 15%. And that's the other way that you get pulled under. I'm a big believer that if you can make a plan that resolves making the minimum payments and then aggressively attacking the card with the highest interest rate first and trying to whittle down the debt, so you now have more money going towards principal every time you make a payment, that debt settlement is a great way to resolve this. And we never push our clients into a bankruptcy. We counsel them through both options so that they can make an informed decision about it.
And, we kind of talked about this earlier, but, there is a lot of wrong information out there about debt settlement and, people who want to not necessarily help you. So if people want to research debt settlement, where can they find reliable information about debt settlement if they kind of want to see what it's about before they go to ask for help?
Yeah, well, one place I think is always a good place to start, and it's going to be third party, so it's not coming from any of the companies that are offering any of these services, but that's the CFPB's website. So they're set up, they're government agencies set up to protect consumers and also to provide them with information to make, educated financial decisions. So you can go on to their website, and I don't know, Katie, if you can post it at the end.
Yeah.
But the website consumerfinance.gov, and you can just search debt settlement in there, okay. And there'll be a lot of good information just in general about what things to look for and to be careful about for debt settlement. But there's also information on bankruptcy and nonprofit credit counseling. So I think that's a good place to start.
Yeah, I'll put that in the description of the podcast. So if anyone wants to get that information, they can get it there.
I would have said the same thing. My old law school professor was in charge of this for a while. So that was always amusing seeing his name pop up But I'll say the other thing is, in the world of Google, we can get very, very lost. But before you sign yourself up with a company, you can very, very simply do a review finder and see what their reputation looks like, see what Better Business Bureau says about them. Make sure that you're finding yourself in a position where before you commit your money to something, you've done a little bit of research.
Yeah, great point. And just even a warning on that too is, they'll also be the ones who spend most of the advertising money. So just being aware that when you're Googling, the first probably page or two of anything that's going to come up regarding, credit cards and debt settlement is going to be these debt settlement agencies. So you need to go a little further beyond that and make sure you're getting to a real good review source.
So we definitely talked about nonprofits earlier, and they're kind of the way to go. We're a nonprofit credit counseling organization here at Navicore. So are there any similar programs offered by a nonprofit credit counseling organization, such as like a less than full balance or debt reduction program?
Yeah. So just in the last couple of years, we have been working with creditors on a program that does allow a nonprofit credit counseling agency to enter into an arrangement with a creditor and this would be only for your accounts that are completely charged off, the ones that you're gone past 5 months delinquent. The creditor's already basically written them off. They do have a program that they work with us now where the consumer can pay 50% of the balance back over 36 months. And then at the end of those 36 months, the remaining 50% is forgiven. There's no interest, there's no fees accumulating or anything like that. So it's just going to be a straight flat payment where the debt's paid off in 36 months. And the advantage there being, it's set up just like a debt management program is, in that we work with any creditor who accepts this program. We work with everybody at the same time. So as soon as your first payment, any creditor that's not part of the plan gets a piece of the payment, and they've agreed to that 36-month program. So we're handling all creditors at the same time that are part of it.
Yeah.
Right. And I mean, that would be my stressed reminder is when you're dealing with committing to a debt management plan, you really need to go all the way. You shouldn't pick and choose with your cards and say, oh, well, I'm going to keep my American Express out, or I'm going to keep my Amazon out because I like the points I get. Not having total commitment to this means that you may start accepting offers and settlements, and you're not disclosing that on the side you've started accumulating another snowball worth of debt on the quote unquote cards not included. And that's, you're not intentionally deceiving your counselor when you're talking about that. You thought you could handle it, but you probably found yourself in the same exact problem. Just now you've built a second one. So when you're going to commit to resolving your debt, you need to go all in on doing it.
Yeah, that's a great point, George. And that's, I think, where somebody just needs to be at that point where they're going to do some self-analysis or some reflection on their situation and realize, hey, maybe I do need to make changes. I mean, there are certainly situations where somebody could be managing things great, no credit card debt or whatever, and they have this huge medical issue or a job loss that they didn't see coming, and maybe they go through some reserve funds that they have, and it's a chunk of time that was really unforeseen and put them in this financial situation. However, I think in a lot of cases, some of it is money management. Some of it's just, decisions that we've made a long time and not realized, that debt is accumulating. So George is absolutely right. You want to make sure you've looked at those things and you're going to make changes going forward. And you're not just keeping in a card or two open so that nothing has to change.
Yeah.
Right.
And then, and then you just keep living the same way and making the same decisions and not putting maybe some budgeting things in place, and you end up in the same boat 3 or 4 years down the road.
Yeah, there are a lot of different situations that you put yourself in that you might need to go and get help with all your debt. And, looking at a nonprofit credit counseling organization is great. So, what are some pros when working with a nonprofit credit counseling organization?
Yeah, and I think this, same as what George described with what his company does, is we do take a holistic look at your situation, right? So we don't go in with a preconceived plan to get out of debt. We want to understand what's your income like, what expenses do you have, what other responsibilities are there, and make sure we really understand that, and then also talk about maybe the near future. Do you see any changes that are coming? Do you expect to be some additional financial challenges coming, or maybe you're up for a job promotion, or you're going to be able to get some of your hours back in the short term, right? So just understanding what's happening right now and what's expected in the near future. That's what a credit counseling agent is going to do to help you make the best decision, because you want to make a decision now that's going to be in your best interest for the long term, not just a short term quick fix.
And I mean, on to that point, I think we've done a lot better for the next generation about explaining financial literacy. It's actually taught in high school now, and as a 40-something, that wasn't really a conversation we had until you found yourself already making mistakes in college. And I think going to a nonprofit for counseling, it's not just getting you through this, it's giving you the building blocks to succeed so you'll never find yourself back in this problem again. And that has to be highlighted, that this is really the counseling aspect of this, the aid in learning how to deal with a budget appropriately and how to save money so you can make the right purchases and not find yourself spinning in the same cycle over and over and over again.
That's a great point, because, if our clients do get a lot of education because they don't want to find themselves in this situation again after they finish our program. So I just want to go back to debt settlement in a little bit. Is there a cost for participating in settlement or less than full balance?
Yeah, I would say yes for both, but there is a big difference in the type of fees that you're going to pay. As a nonprofit credit counseling agency, we fall under the limits set by each state, so we need to cover our expenses, but we'll have a nominal monthly service fee, and we always work with consumers based on their financial situation. So we try and make something that's going to be affordable. But that is one of, when you're talking about some of the debt settlement agencies you want to be aware of, that has always been one of the big complaints about them. And it is the amount of fees that can pop up that you're not realizing. And in many cases, just the fee through settlement ends up being, more than 20% of the consumer's balance. And then, as George kind of alluded to earlier, sometimes things pop up along the way. Oh, you're getting sued. Well, if you also want some protection from our attorneys, that's an extra whatever,
Right.
couple $100 a month, right? So there's other things pop up that you just have to be aware of. So you want it's very important to look at the fees. Nonprofits, the fees will be much lower, and it'll be and yeah, I think one of the big things that's different too is it's the structure of our program. So the monthly service fee, it's just based on your monthly payment. So each month you make it, the fee comes out. If you stop on the program, no ongoing fees still owed to us or anything like that. Whereas many times in a debt settlement arrangement, if you've made a payment and it's gone to one of your creditors, but you didn't make the full payment, you may have triggered a large fee due to the debt settlement agency. And if now you've stopped and you say, well, I can't afford this program anymore, well, you still owe that fee.
Right.
So that's where people get stuck as well.
Yeah. And I mean, listen, the balancing act of this becomes, if you do have to go to way of an attorney, the typical bankruptcy costs between $3,000 and $5,000. And most of my clients come to me in a position where they're already in distress. And they candidly ask me, well, how are we supposed to come up with that money? We break ours into a few payments. But normally I tell them your monthly minimum to your credit card companies is between $700 and $1,200 anyway. I'm affordable the moment that you stop making those payments. But you want to probably go one way or the other, commit to the nonprofit or commit to the bankruptcy, because if you need somebody to continue to defend you in lawsuits, imagine my cost at $300 an hour times every lawsuit you find yourself in.
Yeah.
Now it's really quicksand. And that's why I try to encourage people to not keep their head in the sand and pretend this problem's going to go away, but be as proactive as possible about it, because there are options out there that really, really can help you before it gets worse.
Yeah. So since we're kind of talking about the costs of everything and, how much it would cost, what about tax implications? Are there any tax implications when you're settling your debt?
Yes.
Okay.
So let's pretend that we fell under the lines of settling out the debt for 50 cents on a dollar.
Mm-hmm.
That means that you're going to receive a 1099 that is giving the amount of forgiveness as if it was earned income. So you have the potential of being taxed on the forgiveness. And that's just a mechanism set up by the government. So the institution that is taking the loss is using that for their benefit in the taxes. And the federal government wants to make sure they are seeing the balanced side of that. And therefore, you might have a tax bill, which means if you're settling anything, absolutely talk to your accountant and let them know that you might need a balancing of some of your other losses in order to fix this gain. In the alternative, if you do file a bankruptcy, that forgiveness cannot be charged. The bankruptcy actually resolves it.
And it really does vary, right? So it is and we always recommend that, speak to, a reputable tax accountant. Because it does. I mean, you say you have $10,000 of credit card debt and you're going to forgive it, and you're getting 50% forgiven. So that 5,000 gets added to income and it factors into what tax you owed. But again, that depends on your situation. If you're not, if you don't have great income that year, you may not have any tax consequence from it. But
Right.
If you're in a higher tax bracket, you will have a significant tax consequence. So you just need some professional guidance to help you understand what the impact's going to be. And just because there's a tax bill doesn't mean that that's still not the right decision for you. You just want to factor it in with with everything else you're looking at.
Right.
So I guess another part of debt settlement we haven't talked about is a person's credit score. So what happens to a person's credit score during debt settlement?
Usually, so when you're going to reach a point of debt settlement, and this again goes back to at what point are you considering it, right? So for our program, your debts are already charged off. The damage to credit score comes along the way of going from I'm current on my accounts to now I'm missing payments. That's where your credit score is really getting damaged. It's those missing payments each month that actually puts you in a position where you need to consider debt settlement. For the most part, once you're at a point of doing a debt settlement and a creditor realizes they're not going to get paid otherwise, the credit has been damaged already. So the actual act of debt settlement many times is not the piece that does the damage. It's what got you to the point of needing to settle your debt in the first place. But that's where you want to be careful who you're dealing with, because if you talk to a shady debt settlement company and your accounts are current and they go, all right, well, here, we're going to help you settle this for 50 cents on the dollar. What you need to do, though, is stop paying your creditors and pay us, and then we'll help you settle this along the way. Well, your credit score may not be so terrible at that point, but now because you're paying them instead of a creditor, then that's when the damage starts.
Right.
Yeah.
And that, we like to call it the toxic event, right? As you miss your credit card payments, your score takes a hit. If you default on a car payment or a student loan or a mortgage, it's even more significant. But as you see yourself going down, that's your opportunity to try to make a quick hit on it. And the one difference between debt settlement and bankruptcy is the moment you file bankruptcy, all the negative reporting has to stop. So the score actually does not continue to drop once you've filed the bankruptcy. You've cauterized the wound. You've stopped the bleeding. So now you can start focusing on the recovery from it. And I'm looking, I think this might be the right spot to talk about this. The ability to recover a score once you get past the problem is remarkably simple. Unfortunately, it's a system where you really want to stop whatever the negative events are first. So the charge-offs, the collections, the late reportings, all of that needs to go away. But ironically enough, part of what got you into the problem is also your way out. And that's usually we counsel our clients on picking up 3 secured credit cards and putting a nominal charge on them every month and paying them off every month in order to accelerate the recovery on a credit score.
I think a lot of people also find their credit score to be low because of maybe their, we talked about finances and financial literacy and using their credit card. So can a person still use credit cards while they're on a debt reduction plan? What would you say?
Yes, but they shouldn't.
Yeah.
The reality
you can, but you shouldn't.
Right. The reality is, of course, you can,
Mm-hmm.
but you're also giving an opportunity to risk falling back in the same problem.
Mm-hmm.
And therefore, if you want to keep a card, quote unquote, for emergencies, then it should stay as a card for emergencies, not for the get by between paychecks, which is what got you in the problem before you began. That card should go sit in a box waiting for you to resolve the other things, unless, the tuition bill hits or the car repair hits or the something hits that needs to be fixed. And if that does happen, then you have to, again, re-examine your budget and find the money to pull out of something else in your budget to make up for that shortfall so that you're not impacting your debt settlement plan.
Yeah. And I think too, when you talk about an emergency fund, part of this analysis in the beginning is honestly looking at your budget and understanding your budget, because some people do think maybe a car repair is an emergency, and while it's an emergency that you take care of it, it shouldn't be considered an unforeseen event, right? Mm-hmm. Car repairs happen every year, just so that you should be putting money aside for. So it's not, you want to be prepared for the really unexpected expenses. So if you've gone through this process and you're addressing your budget, you shouldn't end up having to rely on a card. But yeah, sometimes you do need, whether you're somebody who has to travel or, a credit card, many times in this day and age, is very important and useful to have. But again, you don't want to fall back into the same habits.
Yeah. Well, it's expected. And I mean, part of the problem is that we've become so reliant on credit cards to evaluate and give a score to people that it's almost impossible to get through this world without having a credit card. Like, you can't be a cash person and buy a house unless you have the cash outright. A mortgage company will not help you. You're going, hey, I make $150,000 a year and I've got 100 in the bank. And they're like, yeah, but you've never established credit. So they're going to tell you to go take 6 months, establish credit before they can decide if they trust you. And Katie, what you said before was really important, in that people have bad scores either because they've already started to default on the card or they're using too much of it. So if they keep their limit, I tell people under 30%, but it's really under 40%. I tell people if they keep their monthly load under 30%, it's okay. Back in the crazy days before COVID, when we could be in person, we used to do a seminar on this, and I'd pull out my wallet and I'd be like, here are 10 open credit cards. I can borrow $150,000 on my credit cards right now. So who wants to buy a Tesla? And the difference is the person that can carry a debt ratio of, 0 with 150,000 of available has really learned the discipline of not overdoing it on your cards. Whereas the person that only has 5,000 of limit doesn't appreciate that anything more than 1,500 a month being carried on that 5,000 card might start impacting your credit negatively. This goes back to literacy. I mean, financial literacy is really the lesson to pull out of this conversation.
Yeah, it's definitely important. And especially for younger generations, I'm a millennial and even younger than me, Gen Zers, like that's kind of why I like this podcast. So it teaches everyone a little bit more financial literacy so they could do better than the generations before. So I guess my next question would be, on average, how long does it take to repay your debts if you're on one of a debt reduction program? It's obviously different for everyone, but what would like the average be?
So the plan that we now have set up through a nonprofit, if you are going through the debt reduction program, which is where you pay back 50% of the debt, it's 36 months. So it's a 3-year period where that debt is paid off during that time.
Okay.
And obviously in a bankruptcy, there's usually two different types of bankruptcy. And I spent a lot of time talking about what's known as a Chapter 7, which is a liquidation. In a liquidation, there is no repayment of the debt. But let's talk about Chapter 13 for a second, which is you either have too much equity in an asset, or you make too much money that you don't qualify, or your budget has a little bit of money put aside on a surplus, but not enough to pay everybody in full. The court has a formula that they look at, and based on that formula, it will tell you how much money you have to pay back to your creditors. So the percentage of what you pay back might be less than 50%, and the timeline to pay it back is somewhere between 36 and 60 months.
And then, a lot of people who have a large amount of debt, they're somewhat unsure about debt settlement or even like credit counseling. They're unsure if they want to do something like that. So what would you say to a person who has a large amount of debt, but they're unsure about a debt settlement?
Well, my first recommendation, I mean, these are stressful times. When you reach that point where you're kind of thinking, well, I really need to do something, it's out of your hands. First thing I would do is say, take a deep breath and know that there are a lot of options out there for you. And there are resources that you can take the time to figure out what's really going to be best for you in the long run. You've got great resources with the CFPB to look to. You've got excellent attorneys like George to reach out to, and you've got the nonprofit credit counseling industry that's there to help you as well. So really, it's about taking a deep breath and gathering your information before you make any financial decision.
A lot of this is about fear and judgment. I have a postcard that I send out to people talking about bankruptcy, and it's an ostrich with its head in the sand and a giant anvil, like the old Acme Roadrunner anvil, about to fall on their head. And people close their eyes and hope and pray that their problems are going to go away because they're so petrified to deal with them. And once they confess that they have a problem, they're afraid that the person they're confessing to is going to judge them. And it's not in my interest. It's not in Navicore's interest to judge you. It's to educate you and to help you figure out how to get past this problem and get back to stable ground. And what I'll tell those people that are afraid to deal with this problem is that the moment you actually unburden yourself from that fear and talk to somebody that is skilled in how to get out from under this problem, you actually start sleeping better at night. And the value of taking that stress and that burden off of your shoulders far outweighs the amount it's going to cost for you to figure out how to get back to normal. So I encourage you, get over your fear, get over your own mind fog, and take the opportunity to, have a free consultation and learn what your best options are.
And just keep an open mind too. Just when going into it, definitely. Well, I think you guys answered all my questions about debt settlement today. So I just want to thank you guys for taking time out of your day and talking to me and educating our listeners about this topic.
Yeah, great. Thanks, Katie. Really enjoyed it. And George, it's great to speak to you again as well. Look forward to hearing the podcast.
Yeah. Thank you again.
Thank you, guys.
I think we covered everything related to debt settlement in this episode. George and Phil really know what they're talking about and were able to give a great overview of debt settlement. They also did a great job at explaining the differences between debt settlement, bankruptcy, and debt management plans. Be careful when looking for a debt settlement program. When in doubt, turn to a nonprofit organization, or you can even go to a bankruptcy lawyer for help. If you want to reach out to us for information regarding anything that was discussed in this episode, I'll leave our social media handles and email in the description of this episode, and you can reach out to us there. So that wraps up another episode of Millennial Debt Domination. Please subscribe to our podcast wherever you're listening, and if you're listening on Apple Podcasts, please leave us a rate and a review. I'll talk to you next time, Millennials, Gen Zers, and everyone else listening. Bye!